Bitcoin is approaching the 100K, and it's not just the price that it's at an all-time high, it's also the general sentiment of the market. People are speculating, where is the cycle top? Is it at 150K? Is it at 200K? Is it at 500,000? Let's have a look at some on-chain metrics to try to determine where we could potentially take some profit along the way. Because this is what crypto is all about, right? We've got this massive volatility. We sometimes see Bitcoin correct by 60, 70, 80%. We can, of course, simply just ride through that. But alternatively, I think it's better to sometimes sell high and try to rebuy lower if the opportunity arises. Now, here's Bitcoin over the very long term. And everybody talks about those cycles as we go in expansion mode, subsequently bear mode. Then we expand again, we go down, we expand, and we go down. And these kind of drops on this very long-term logarithmic chart don't really look like much, but actually when we measure this from top to bottom, those are corrections of more than 80%. And so now we are high again. Does it make sense to take profit? Now here's a very simplistic approach. We start with the cycle bottoms and then we plot what did the price movement do afterwards. And when we compare the cycle between 2015 and 2018 and 2018 and 2022 and we overlay the current cycle over this, which is the black line, things look very, very rosy, right? It seems like there's still a lot of upside potential. The cycle from 2015 to 2018 made more than a 10,000% return. For the 2018 to 2022 cycle, we went up to 2,000%. But in this chart, we also see somewhat of a cautionary tale, right? If you expected the same kind of returns in 2018 that we have already seen in 2015, you wouldn't have sold on time. So we did not go to 10,000% return. We stopped at 2,000. And there is the theory of diminishing returns, as in the market cap of Bitcoin rises over time. And relatively speaking, the bull markets get more muted. What initially had been a 50,000% return subsequently became a 2,000% return. And so who is to say that we're going to see again 2,000%, right? We might top out earlier. Now, I believe this is the art of crypto investing. On the one hand, we have to be optimists because we take on risk and we want to get that risk compensated. So we have to be long-term bulls. But on the other hand, we need to turn somewhat realistic once prices get too heated. There are plenty of people that became millionaires on paper and that in the end did not sell, that then came crashing back down. Now let us play with a scenario. It will not apply to most people, but it will apply to some. Let's say you bought during the FTX collapse, you bought somewhere around this level here. And right now you are up more than 300%. What is the smart thing to do in this case? Now I'm saying this is probably not the majority because the vast majority of people come in when prices are high. Very few people actually stick around when prices are low. But if you bought during the lows, if you are one of those hardcore people that still watches crypto content when everything is down and you are now getting rewarded for this, what should we do now with those gains? I believe the answer lies in what other assets you also own. If crypto was at the beginning of your investment journey, say 15% of your portfolio, and now after this rally, it's suddenly 40 to 50% of your portfolio, it probably makes sense to diversify somewhat because the risk to reward profile isn't as great for Bitcoin as it used to be. At the same time, you're now much more exposed to Bitcoin than you used to be. Again, it's all about optimizing risk to reward for the entire portfolio. Now, what could potentially be bought? One option is gold. Because have a look at this. This is the historical returns of Bitcoins, the 90-day performance of Bitcoin in orange. And we've also got the silver performance in blue and the gold performance in yellow. And we can see how blue and yellow tends to correlate somewhat, right? They tend to go up and down pretty much at similar times. Whenever gold is rallying, silver tends to rally as well. But we can see quite a bit of independent movements by Bitcoin. So over here, gold and silver is rallying, but Bitcoin is rallying afterwards. Over here, Bitcoin is rallying first, and then gold and silver follows. And so we can actually quantify this. This is the correlation coefficient, the 90-day correlation coefficient of Bitcoin to gold. And when it's at 1, this means those two assets move in the same direction at the same time. When it's at -1, it means they move in opposite directions most of the time. But it seems like there's pretty much zero connection between gold and Bitcoin. And so that makes gold a very good diversifier. Now this diversification becomes more important the larger your wealth is relative to your income. If you've got, say, 3 to 4 years of income saved up, that's your wealth, then it does make sense to diversify. Because let's say Bitcoin now suddenly out of the blue, maybe because of an external event, maybe because of a banking crisis, whatever it is, it suddenly crashes by 50% and you only have mainly crypto. In that case, if you've got already that much wealth, you won't really be able to buy the dip. And so you can't really take advantage of those lower prices. However, if your wealth isn't really that large relative to your income, it's not really that important to diversify, because at that point you simply can just save more, you can take more of your earnings, you spend maybe less in those following months, and you invest this all into the dip, and it would still balance out. You could still take relatively good advantage of those low prices. So buying uncorrelated assets, the important thing here is uncorrelated when your wealth is high is super important. If you buy Bitcoin and then you diversify with Ethereum or with altcoins, you gain nothing, because those kind of assets go up and down at the same time. Now, please don't understand me wrong. I am actually still, at least short term, very bullish on Bitcoin. And one of the reasons is we still see an expansion of the ecosystem. We still see how money is flowing from the fiat system into crypto. And we see this with the stablecoin market cap increase. Have a look at this. This is the stablecoins exchange net position change. So this is going up. There's more and more money flowing from traditional finance into the stablecoins. So when you're going to Binance, you send them your hard-earned money, and then they give you Tether in order to trade this. That means effectively that Tether holds now your US dollars, gives you the tokens, and that those tokens have been minted. And we can see the balance of those stablecoins over time. Over here, this was the Terra Luna collapse. We also afterwards had FTX, and then this turned around at the beginning of October of 2023. This is when I went very risk on. This is also when I closed all my short positions on altcoins. And so now it's expanding, and it's even accelerating more recently. And so I do believe that the likelihood of going up is higher than of going down. Now, there are some interesting on-chain metrics that I always like to look at to gauge how heated a market can potentially be. Because obviously we aren't super dirt cheap now, but we aren't yet super heated either. One of those indicators is the net unrealized profit and loss. When the market in aggregate is a lot in net profit, then some of that profit gets taken, right? Some people might reallocate their portfolios because they might be overexposed to Bitcoin. When the market in aggregate is in losses, that's when you want to buy. Because if you believe long-term in Bitcoin and you're currently in losses, then you won't sell your Bitcoin unless you have to. So here the supply tends to dry up. Now currently we aren't yet in euphoria phase. We are close to it, but we aren't yet there. I do not believe that this is already a reason to sell, because have a look at similar levels in the past. Here in Q3, Q4 of 2020. Had you sold over here already, you would have lost this entire bull run. And that bull run was another 240%. So this indicator really only works as a sell signal when we are in the blue area, when we are already very heated. Now, with investing, it's all about probabilities, right? Nobody can say deterministically where the price is going. We can only say it's more likely to go up than go down. And so the question is, at what points in time, at what kind of price levels might it make sense to at least take partial profit, right? We don't want to be completely out of the market, and we never want to be completely in the market. We always want to have some kind of weight to account for probabilities. And so here is where I think a potential first resistance could be. It's no exact science, but sometimes technical analysis does become its self-fulfilling prophecy, right? Just have a look at how nicely those floors here align. That's probably no coincidence, but also have a look at how nicely those tops align. Now, those are not mathematically derived lines. This is simply just drawing random curved lines on charts. There's nothing scientific about it, but still it's psychology. And if we zoom in here and we look at that potential upper ceiling, we are already reaching that at $117,000. Again, I'm not saying that we have to go up there. I'm also not saying that we have to afterwards crash down, but it is a psychological hurdle. And so if you're overexposed at that point, and then the majority of your wealth is in crypto and is in Bitcoin, maybe it makes sense to at least at that time diversify a little bit. Again, it's not necessarily always about squeezing out the last bit of return. It's more about making best risk-adjusted return decisions. And so we can already see that with this run, some of the long-term holders are selling. They're not yet selling massively, but they're starting. This is the long-term holder spending binary indicator. And we can see how the long-term holders sell into a rally, right? They take profit as the price goes up. And then they do the exact opposite when the price isn't going up, right? They dollar cost average into the market. And they continue to buy up until here, when Bitcoin was at around 45K. They sold into the 60Ks, then started accumulating again for lower. And now they are distributing again. They're starting. Again, it's just the beginning. It's not necessarily yet a red flag, but if this continues for long enough, of course, that's not necessarily great, right? A lot of liquid supply by the long-term holders adding to the market needs adequate demand also. Now, what is currently supporting this positive price action action in Bitcoin? I believe it's mainly the Bitcoin ETF. This also explains why the Bitcoin dominance is rising, right? Bitcoin as a fraction of all of crypto is going up, and the inflows for the Bitcoin ETF are pretty constantly positive recently. Here is the data. Initially, we saw quite a lot of outflows due to the Grayscale Bitcoin Trust. Now we don't see those outflows anymore. Now we see mainly inflows into the new ETFs. And so what initially had been a lot of headwind for the adoption and for price action now completely went away. Here's the long-term holder and US spot ETF balance position change. And the ETF in blue gets continued accumulation while the long-term holders start selling a bit, but they don't really outsell what comes from the ETFs. And so if we see the same kind of inflows that we've seen in the last 14 days and we annualize this, we get to 9% of the entire Bitcoin supply getting scooped up by the ETFs. Currently, the ETFs only hold 5.3% of the supply. So the crypto market is clearly expanding, right? We can see this from the stablecoin market cap. But at the same time, the altcoins aren't doing that great. What we've got behind me is the others dominance. So this is the share, the market share of the altcoins that are not in the top 10. And this is going down since the beginning of the year by more than 30%. And for the last 2 years, it went down by more than 50%. Meanwhile, the Bitcoin dominance continues to rise. Bitcoin becomes a more and more important part of all of crypto. There's only one subcategory that's outperforming within the altcoins, and that's the meme coin market. So it's not DePIN, it's not infrastructure, it's not GameFi, it's meme coins. Just have a look at this. Here is AI memes, here is base memes. While at the same time, infrastructure like liquid staked Ethereum, boring and lending, DEX aggregators, etc. didn't do that well. And so I believe there are two viable approaches to make money in crypto. Either simply just dollar cost average into Bitcoin, potentially add a little bit of leverage and then sell whenever we get very, very heated. That's approach number one. That's pretty straightforward. Most people can make money with that if you're just following the market closely and if psychology doesn't get hold of you. The second approach is to go a bit more micro. It's being a bit more active. It's to trade the markets that currently have most attention. And so just have a look at the best performing tokens in the last week. We've got more than 2000% return in Waifu, 400% in Cerebro, almost 200% in Mudang, etc., etc., right? The list goes on, but have a look at those market caps. They're all just in the tens of millions. Very few are in the hundreds of millions. The difference with that kind of approach, though, is that this is 100% a player versus player game. So this is not just investing. This is actually trying to beat the competition. It's trying to time the market better than others. And so if you're interested in this active trading approach, right, if you want to beat other market participants, I think it's important to have the proper tooling. So for example, this is what I do. I track various influencer wallets. So the blockchain is 100% transparent, right? We can see who buys what. And we see over here that Crypto Banter bought the Peanut token at 3 cents. So this is a meme coin on Solana. Since that purchase, the price went up by more than 4,000%. And here's the Crypto Banter YouTube channel. They've got more than 1.1 million subscribers. When they talk about a token, of course it generates attention. And of course this will increase the price. And so we are tracking 33 of Crypto Banter's wallets. In total, we track more than 400 wallets. So it's not just Crypto Banter. We are also tracking Alex Becker, for example, who's got 1.5 million subscribers. We've got 12 of his wallets. And so again, you can simply just stay with Bitcoin, and that's completely fair because the Bitcoin dominance is likely going to continue to rise. If you're more actively trading though, I believe it's important to not just randomly pick meme coins on a list. I think it's important to follow the insiders. It's important to follow the people that influence markets. It's important to follow the people that tended to make very good trades in the past. And because I like this tracking approach, this wallet tracking approach so much, I also made a dedicated tutorial section just on that topic. How can we find influencer wallets? How can we then subsequently track those wallets? And how can we finally also interpret the signals that we get from the tracking? And so this is all part of the premium membership of this channel. It's down below. It's thebitcoinstrategy.com. Feel free to check it out. It's not just about wallet tracking. It's also about macro indicators. It's also about on-chain analytics. It's also about risk management and portfolio diversification. There's more than 100 tutorial videos in total. Now, once we have a signal, we of course also need to discuss when should we buy, when should we sell. We have to also compare the different on-chain analytics that we get. That's why we've got dedicated chats on the individual altcoins as well. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't make money, just message me within the first week and I will refund you 100%. There's really zero risk for you. I believe it's very, very likely that we're going to see the 100K in Bitcoin extremely soon. The inflows in the ETFs continue to be high. The selling by the long-term holders isn't yet as high. And so I do think simply net, because more money is flowing into the stablecoins, prices should rise. Now, I'm not always that bullish. This is not your typical crypto channel that always pumps up prices. Just look at the prior videos on this channel, right? When you look at the videos back before October of last year, I was actually very, very bearish again because the stablecoin market cap shrunk. And at that time, I was mainly shorting tokens. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.